Hi everyone, welcome back. This is the part 2 of cash and cash equivalents. If you didn't get a chance to watch part 1, please have a look. There I talked about accounting standards on cash and cash equivalents and audit approach. In this video, I'll show you an example for test of control just to give you an idea how test of controls will look like, and especially if you are a beginner in auditing, this will help you to do control testing working paper on any section. So let's see. There are 5 main steps in control testing on any section. First is identification of the process. Do inquiries, refer last year auditing working papers to have an idea about the process. For example, for cash, there may be different process. There may be a separate process for cash payments, cash receipts, and bank reconciliations. Like that. Ask what is the process for this scenario from client, and then identify what could go wrong. For example, if you are focusing on bank reconciliation process, what could go wrong is there may be incorrect bank reconciliations. And then identify relevant controls to mitigate that risk. To mitigate the risk of preparation of incorrect bank reconciliations, client may have applied segregation of duties, where one person is preparing bank reconciliation and someone else, someone superior to the preparer, is reviewing the bank reconciliation. That is called segregation of duties. And then evaluate the design and implementation of the process. And if the design and implementation of the process is effective, go for testing operating effectiveness of that control throughout the year. Now, in step 4, say if you conclude that design and implementation of the process is itself ineffective, then don't go for test of operating effectiveness, because we don't have to test the operating effectiveness of an ineffective control. So now let's see how the control working paper will look like. This is my process study. I have done my process study, design and implementation, and test of operating effectiveness in one Excel. And this is the example for process study. I have covered 2 processes here. This is a really simple example. In real world, you won't see a simple uh, a process like this, but just to give you an idea how to document, I have taken it as simplest as possible. So first I have documented bank reconciliations preparation. I have mentioned the accountant prepares bank reconciliation on monthly basis before 10th working day of following month. The bank reconciliations is reviewed by senior accountant within next 3 working days. So that's the process of this ABC Company PLC for bank reconciliations preparation. And then I have inquired payment process and documented how the control works. Day before due date, the financial controller, I have mentioned the name, Taylor, review the supplier aging and prepare the list of suppliers to be paid on following date. This list is then sent to junior accountant Justin to initiate the online payment in the system and generate double entries on following date. On due date, junior accountant Justin initiate the online payment and it is approved by senior accountant Billy or financial controller based on the size of the payment. So they have authorization limits. Senior accountant can authorize from $1 to 999, and financial controller can authorize from $1,000 to 9,999. All payments above 9,999 needs board's prior approval. And there's a special note. Junior accountant Justin was on leave in November. All his tasks were performed by senior accountant Billy. Why this is important? Because sometimes the people who involved in control process are on leave or they are absent for some time for some reason. We have to identify what was the alternative procedure in place to cover that person's task. That's why I documented this. Now I have a good understanding about the process of the company, and then next I'm going to identify what can go wrong and relevant controls. Here I have identified 4 what can go wrongs, and we have 2 relevant controls addressing these what can go wrongs. First is incorrect bank reconciliations, and second is non-reconciling items between cash book and bank statement. These two risks are mitigated by review of monthly bank reconciliations. And third, what can go wrong is unauthorized payment, and fourth is fraudulent payments. Those are mitigated by authorization limits. So this is my table for what can go wrong and relevant controls. Next, I'm going to see the design and implementation of the process. Here in this sheet, I have documented important aspects of the process to evaluate the design and implementation. First, how is the control performed? I have just copy and pasted the same thing I had documented in my process study. The accountant prepares within 10 days and then senior accountant reviews after following 3 days, within following 3 days. And how frequency? It's monthly. I have added a list here. If it was weekly or daily, I could select that. What are the risks addressed? Incorrect preparation of bank reconciliation and non-reconciling items between cash book and bank statement. What are the assertions covered? Completeness, accuracy, and competency of the process owners. We have to assess whether the employees who perform these particular controls are capable of doing what they have to do. So yes, we say the employees who perform the control are sufficiently qualified, experienced, and possess adequate skills. And again, the whether the control is manual or automated, it's manual. And now I said you it's enough to check just one to evaluate the design and implementation. So here I have selected one bank reconciliation, just randomly pick one, and then I have tested whether this was prepared by junior accountant within 10 days and then reviewed by the senior accountant within following 3 days. Yes, so my conclusion is effective. Design and implementation of this process is effective. Therefore, I am going to test the operating effectiveness of this control, and I have kept the space for attaching the support. If you like to attach the supporting in the Excel itself, you can attach there. Now I'm going to test the operating effectiveness of the control, and for this I have taken 3 samples covering whole year. So now risk of failure is high, control frequency is monthly, risk of failure I have assessed as high, that is based on professional judgment, and I have taken sample size as 3. So I have tested August, Jan and June reconciliations, and then I have tested whether this was prepared within 10 working days, prepared and signed by accountant, yes, and then date reviewed within following 3 days, yes, and reviewed and signed by senior accountant, yes. So this has been operated effectively throughout the year. That is our conclusion on this control. Next, I have done design and implementation testing on payment authorization, where I considered same aspect as I did for previous design and implementation process, where I'm not going to in detail discuss this. Only differences are like the frequency of the control is daily, so I'm going to test a higher sample for test of operating effectiveness. In this test, I have selected 20 samples because the frequency of the control is daily, not monthly, so I have to consider a higher sample. In here I have considered whether junior accountant created the transaction and then approved by whom based on the amount of the transaction. If the amount is less than 999, senior accountant, and if it is less than 9,999, financial controller has to approve that. And I mentioned in the process study, if any transaction above 10,000 has to be prior approved by uh, board of directors. So we have not uh, come across any transaction above 10,000, so I didn't test that control here. But now you see, in November, this transaction has not been initiated by junior accountant. The reason is junior accountant was on leave. I had mentioned it in my process study. So this concludes the example on control testing. I will see you in my next video showing you how to do test of details on cash and cash equivalents.